earnings. I'll possibly wait a little bit till we start. So for everyone who's watching this one later on, welcome. This is a live stream, so you can actually ask your questions in the chat, and I think I will have some time later on during the video to reply to most of your questions, the interesting ones. And yeah, if you're watching this video later on, then of course you can only read those comments again. But yeah, feel free to use the comment section in order to add your thoughts about NIO earnings and also your commentary around it. As always, welcome to subscribe to this channel if you're a new viewer. This is about Chinese stocks that we are discussing here on the channel. Very big focus on e-mobility. So, for example, investments in, let's say, Tesla, NIO, and so on. Most of the stocks that I'm covering are actually also part in my portfolio. So, you know, you get that hint. I'm a little bit biased, of course, with my own holdings here. So don't take this as a financial advice. What I like to do here is to discuss the information that we have at hand as retail investor. So you can also, you know, get a better view on making your own decisions in the end, right? Because I cannot pull the trigger for you. You have to make your own decisions, hopefully informed decisions. And so this is what we can discuss here on the channel. So if you appreciate that, then please smash a like. That's my currency as a YouTuber. This helps to bring those videos up to more viewers on the channel. Now we're already 75 people. That's awesome. Cool. I think then we can already kick off. So first of all, I'm going to walk through here first reporting by Seeking Alpha, the headlines, and then go into the report. I actually already had a little bit of time to briefly skim it, but yeah, please leave your comments because I may miss some of the stuff which is in there because basically earnings just came out a couple of minutes ago, and so I'm possibly not catching all of the details. So yeah, that's for the opening remarks. Let's dive into Seeking Alpha. Headline here is NIO beats on the non-GAAP EPS. So that's minus 36 cents. And for the revenue, it's largely in line, but misses by 80 million, given the size of 1.5 billion US dollars in quarterly revenues. That's not a large miss. It's pretty much expected. That's the thing also about automotive, that it's very predictable in a way because we even get the sales numbers. Funnily, there has been some sort of a crackdown on these weekly numbers. I stopped reporting it basically when I have been to China because I really didn't have the time back then to make those weekly updates on the deliveries. And of course, it's very, very short term. So if we're looking at some of the reports about, let's say, for example, how Tesla reports, they have even only the quarterly statements that they send out, right? For the Chinese companies, we get the monthly deliveries. We even get a detailed breakdown in some sort. NIO just changed that to also only start reporting sedans versus SUVs. Maybe a way of protecting them with all of the troubles going on with the ramp of production and changing the models. And yeah, I think we're going to talk about this. Anyways, there's a lot of transparency, maybe a bit too much of transparency. That's what the regulators thought and basically said, okay, let's prevent all of those insurance number leaks. But of course, I know, especially you guys, really love those weekly numbers. Right. So that's a bit of the headlines here, the top line and the bottom line, and then the outlook. Also, we're going to talk about this in a second for the Q2. Of course, we are already far into Q2, so 23,000 to 25,000 cars here. This means NIO pretty much knows already that they are likely to deliver these cars because they're reporting so late. That's one of the smarter tricks that NIO is doing about the reportings. They're doing lots of things wrong in my point of view in the way they're reporting, but the late reporting, that's kind of a smart thing because it's actually helping them to get closer to the guidelines always. So we can pretty much assume that 23,000 to 25,000 are really achievable. But now let's jump into the release. I don't want to bore you with most of the text here. From my first time skimming through it, I actually didn't see too much really new, exciting stuff. Maybe point me to some things that you thought are super worth discussing. What is obvious here, I mean, we can blend out the vehicle sales. That was kind of, if you know how many cars they delivered, then you kind of get the maths done. And this has been very close to the expectations. But of course, what we need to take a look at are the vehicle margins. So these are very low, 5.1%. They have been already low last quarter at 6.9%. Historically, NIO was closer to 20% of vehicle margins, and they actually guided for 25% or even maybe more in the future for the NT 2.0 platform vehicles. And clearly that is absolutely not the case. And I think what many of us have actually been looking forward to was the fall in the price of lithium. So that chart was pretty elevated during the lockdowns and stuff like that have caused, but also maybe the demand side have caused that the input material for batteries have been actually quite expensive, and that was an issue for the margins. But they have come down significantly already, and NIO previously, I think they mentioned like 100,000 RMB in the decrease of the lithium-ion price should actually result in somewhat of a 2% margin gain for NIO. And so we're clearly not seeing this, right? And so my take here is that this is possibly mainly due to the fact that they had, first of all, a low volume overall for vehicle sales. Second of all, the ET5 in the early ramp stages. So the new factory certainly is not up to speed yet, and just only one model. They are certainly not at their optimum when it comes to the production, the margins there, and productivity and efficiency there. And then what possibly is something that management doesn't tell us here in this whole earnings report is that they are possibly also fighting in this ongoing demand crisis and price war crisis in China with this very weak beginning of the year, where NIO was not reducing prices on the old models, but not so much on the new models. And I think there have been lots of perks, like NOP for 1 year for free or something like this, and also some goodies for the newcomers, for the new buyers, which possibly also may result in some drawdowns on the margins here. That's just my best guess. And I'm guessing also that this is something that management is kind of hiding from us in a way, because I didn't find it in the report. Then, of course, if the vehicle margin is low, then the gross margin is also low. This is significantly low. 1.5% is not a good gross margin. And then the net losses have been 690 million. What is in the CEO and CFO comments, I didn't find anything spicy or interesting. Of course, they're highlighting the ES6, so everyone knows that this is the growth driver. In the first half of the year now, they have really dependent not only on the ET5, and the sedan segment is not the biggest or the most popular one in China. So that's an issue. Here were some explanation for the vehicle sales. So the decrease in vehicle sales over the first quarter of 2022. Why is it 2022? Is this a mistake in here? Yeah, definitely. So NIO didn't check their yearly numbers in here. Okay. So please fire the intern in the investor relations department. Okay, was mainly due to lower average sales prices. result of a higher proportion of 85 and 75 kilowatt-hour standard range battery packs. So, yeah, this is what I just mentioned. They relied on the ET5 as driver driving the sales, and users also chose the 75 kilowatt-hour range battery. This is kind of the lowest spec model that you can take in terms of average sales prices, in terms of the battery size, and so on. And this obviously also has resulted in the lower revenues and also the lower margins. So essentially, it's that. The decrease in vehicle sales over the fourth quarter of 2022 was mainly due to the decrease in delivery volume. Yeah. All right. So other sales have been up 211 million. That's nice to see. I'm still waiting for a breakdown by NIO into the different segments of other sales. So I would like to see stuff like how much are they making on like the new life stuff like e-commerce, which I think in the long run is a really interesting segment, a unique segment for NIO, but they're not breaking this one up. How much are they making on the let's say the home chargers and selling those types of equipment for the car? How much are they making, for example, which we still don't know, for the leasing and the subscriptions of the cars in Europe? If you see that in there, I haven't seen it yet. By when I first skimmed it through, I haven't seen any line or any information about how many subscriptions they have in Europe so far. So this is not in the breakdown. And also maybe things like for the BAS, so battery as a service and stuff like that. How much are they making for that? What is new here was where was it? Auto Finance's year-end sales of used cars. So that's interesting. NIO is kind of in-housing the sales of used cars. They have their own used car platform. So it's cool to see that this will be a different business segment on its own. But of course, breakdown missing. All we know is that this number overall is up. So of course, I like to see that grow over time, but so far it's of course pretty insignificant. Yeah, once again, I hope NIO at some point will break down those insights for us. What else? Cost of goods sold. Here I highlighted something. Once again, why are they writing first quarter of 2022? This time I picked the right report, right? Yeah. I mean, it's not the first time that when I'm live that I'm picking the wrong report to read to you guys, but so far I haven't seen any news about that. So sorry, I just got distracted by the comments. Let me know in the comments if I'm missing something, right? I'm just trying to do this on the fly here. All right, so the increase in research and development expenses over the first quarter of 2022. All right, so that's the year-over-year increase was mainly attributed to increased personal costs. Makes sense in R&D and share-based compensation. So that means they are issuing shares for their employees. That's normal in a startup. So the employees want to be incentivized that they get partially rewarded in shares. So they also want the share price to go up. And the decrease in R&D cost over the fourth quarter, because it actually has gone down, was a fluctuation due to different design and development stages in new products and technologies. So this was actually one of the more pleasant surprises, I think. So jumping into my Excel sheet here, where I track some of these reported financials. As you can see, the sales margins are trending down by a lot. The gross margin is trending down by a lot. But the research and development was higher in Q4, and also the SG&A, so selling, general, and administrative expenses, has also been much higher in the fourth quarter. Was it to be expected that in Q1 it would go lower? Not really. Maybe could have stayed the same if they, go full steam in investing more and more and more. We know they have lots on their plate, like lots of models that they have introduced and or will be introducing. And second of all, they're working on 2 new sub-brands. So this is kind of, that's just how I'm personally thinking about it, and you can have a different view or, tell me what you think about it in the comments. But this was kind of a relief for me to see that they are going down on these metrics here. Maybe to give you a little bit of a context, was it? Oh no, I have a different Excel sheet here. So what I've been doing here, and I know I'm the one preaching on the channel always to don't say NIO is the Tesla of China, right? I think I've kept on saying this since I've been doing this channel. However, Tesla is in other ways also a reference when it comes to a startup managing to turn the page and managing to break even over time, as in the EV industry, right? So we kind of need to get some learnings from here. And also lots of people like me are invested in Tesla and also thought NIO is another stock to pick. And also, of course, there's lots of people from the Tesla side who really want that NIO is starting to act like Tesla in each and every way. For example, writing down the cost or being lean in terms of only having like 3 models or something like that. And I'm always saying, like, look, guys, China is different, NIO is different, entirely different vision. So I want to make the point, whenever there's an article out there and it's like, oh, NIO is the Tesla of China, it's not even worth reading or any interview or anything like that, because I think it's unfortunately very misleading. And I think even Li Bin made some of the mistakes and talking too much about Tesla and how NIO compares to it. But that's just my personal view. You may disagree. But anyways, what I've done here is comparing Tesla and NIO, like the economics, like the some of the key numbers that we are getting. For example, how much has Tesla spent on R&D and how much is NIO spending on R&D? And what I've done here is I basically started from year 1, so kind of T1, like time 1, if you want. For Tesla in red, that would be 2017, and for NIO it would be 2022, because Tesla and NIO are round about 5 years in difference. So Tesla is 5 years ahead of NIO. Tesla in 2017 was spending around 300 million, between 300 million and 360 million per quarter on R&D. Now, NIO was slightly below that in the beginning of 2022, and then ramped it up to 550 million RMB, US dollar, by the last year. And now it's coming down, right? What is it again, the number? Now it's coming down to 447. Let me put that in here, 447. So you can see NIO is actually spending quite a bit more than Tesla on R&D here. And the question is, like, is this a structural problem, or is this a different strategy, or is this a problem for the outlook? And what's interesting here is if you look also at the net income, so basically how much money the company was losing back then. So for Tesla in 2017, that was between 300 million US dollars to almost 700 million US dollars, right? And NIO was losing between 290 million US dollars to 850 in the last quarter. And this quarter, I think it's actually, coming down a bit, 690 million. So as you can see, these numbers are pretty close for a similar stage of the company, because if you're looking at how many cars Tesla was selling in 2017, it was roughly between 25,000 to 29,000 cars per quarter. And that's pretty much the same as NIO, between 25,000 and 40,000 cars per quarter. And now we had the 31,000 cars per quarter, and this, what you see here, maybe I have to highlight this. These are actually the projections of the analysts. So if you're looking into the analyst projections here, these are the projections for the full year 2023. So for the first quarter, they expected 1.6 billion US dollars in revenues, and here circled in red 2.5 billion, and then in total reaching around 11 billion for this year. If you translate that into car sales, that would be roughly pricing them for 195,000 deliveries for 2023. So we already know that this will be a very weak Q2. So how much did we have? If I'm looking at the Q2 numbers here, we had 6,658 cars delivered, 6,000 again, and now they're guiding to roughly 10,000 in June, so to arrive at a 23,000. And that's obviously lower than the analysts have projected here. If I go back here, so the initial expectations going into this year was that NIO would be growing in Q2 to 43,000. So this is where the market is basically pricing NIO the way it is right now, much lower than these analyst estimates, guiding for 200,000 on a year. To be honest, when I saw the sales projections today here in a report, so the outlook for 23,000 to 25,000, I thought they were not too bad, to be honest, because yeah, just could have been worse, right? What NIO is obviously doing now is scaling the ES6. So besides the ET5, they will now have the ES6 coming up, and that should carry the volume going forward. However, since the Q2 is already messed up with those low deliveries in the first 2 months, this will not reach a point that it's meeting the analyst expectations for Q2. So I think also this is why from this report here, that's still not enough of an insight into the guidance of NIO, that, let's say, the traders and the hedge funds will need to see in order to price NIO. I think that's when the earnings call will be interesting, because certainly Li Bin and the management will be grilled on their outlook for the entire year. So I think Q2 is basically written off already. What will we see there? Interestingly, they're pointing to 1.2 million, 1.2 billion to 1.3 billion in revenues. And if you take the current, if you're taking the current average sales price, which has dropped dramatically, so that's not a good development. It's only 43,000 in average sales price, mainly because, of course, they have mainly sold the ET5, right? So if we write this forward and put like the 23,000 of deliveries for Q2 here, and this is basically guiding us to roughly 1 billion. And then another 200 million or 300 million in other sales could happen. But my guess here is that they might be actually see a slightly higher average sales price again, which might be due to the fact that now they also start selling the ET7 in the revised version, the EC7, and for the ES6, yeah, we'll see where this lands on the average sales prices, but we might tick up here again. But anyways, this is a weak number, this average sales price, that this is that low. But generally, of course, if the economy is picking up in the second quarter, and people are tending more towards also high-priced vehicles, again, this number may actually pick up again as well. What I'm happy with that NIO is not actually cutting prices and going into this perceived price war, because I do think that if NIO survives this stage in where they are currently, then this will manifest their positioning in the market. Tesla is having those really, really high achieve or targets, which they set by themselves to achieve 20 to 30 million annual vehicle sales, which I have to say, I'm very skeptical of that. And I'm saying this as a shareholder of Tesla, but I think, all right, let me be surprised by Elon Musk. He's don't bet against Elon, but I generally don't see that coming. Anyways, that's where they're pushing. So they're definitely pushing into this lower tier market segment. And I think NIO shouldn't be following that. I think they should manifest themselves more in this higher priced segment, because ultimately, once everything is full in swing and the margins recover on a higher volume, then this becomes very attractive, and this establishes some brand positioning that in the long run can be very powerful. So they might be earning more money on each vehicle sold than, for example, a Tesla and BYD and a Xiaopeng, that's for sure. Despite the fact that Tesla is having higher margins. Of course, NIO would need to get back to those double-digit margins. But of course, that's the business assumption here. And of course, this will not be as much volume than what Tesla is aiming for. Okay, that's clear as well. But for my personal investment case, I've always invested only in the NIO business case, in the NIO brand, which for me is, achieving at some point maybe 1 million cars annually sold, or slightly upwards to that. Similar to a BMW, to Mercedes, between 1 to 3 million annual sales in this kind of a segment. What NIO, of course, is now pushing for is also the sub-brands. I'll have no comments on that until they show something in this regard. I do think, of course, from Wall Street and also lots of retail investors, I'm seeing that they want to see this, because they want to see higher volumes and numbers. But actually, I'm more keen on NIO as a brand selling at high margins, high prices, and then having the whole ecosystem with the network effects and NIO Live around this. That's kind of the vision that I'm invested in. But if the company develops to something else, then I'll take that, I guess. What else? Let me check. I think I'm in the wrong row here, because what I'm also always doing is, it's actually right. Looking at how much SG&A they spend per sold vehicle, and it's below 12,000, which is actually quite healthy. That shows that they didn't have to go extra efforts in spending more money to actually that was in the right position to actually churn out the sales. They have been also very conservative this first quarter with battery swap stations. So only, if I'm correct here, if those numbers are correct, then they have only built 32 new battery swap stations in that quarter. And that's only a 2% increase, while they guided for more than 1,000 that they wanted to build. And I guess we'll hear about this in the earnings call, because what I've read is that they guided actually to start the ramp in those swap stations for the second half of the year, possibly extending it also to some more of the second-tier cities. So, for example, Hangzhou, Qingdao, Suzhou. So these are cities that have around 10 million inhabitants. have a wealthy, affluent population as well, but there's not too much coverage yet. And what we know is that battery swap stations, they act not only as a way of replenishing power or additionally to supercharging, also being able to make it quickly, for example, if you're on a long distance trip, or to swatch the batteries between use cases, but also that they are acting in a way as a marketing vehicle, because lots of people are actually buying a car when they have, for example, a swap station in close proximity, because it's just getting convenient for them. So if they're starting to build out more of those stations, of course, that will cost money, but on the other hand, this will lead to more sales. And management had guided for the second half of the year to do that. I know that they have built a new plant just for manufacturing those swap stations, and that must be the 3.0 swap stations then, which are the latest generation. Because if you think about it, it makes sense. If you're now transitioning to the latest swap station technology, why would you build out more of the second gen swap station right now, especially in a time where overall the market is pretty weak in terms of just coming out of the pandemic. People start traveling and eating lunch, eating food and stuff, but they're not buying the big ticket items yet. Currently they're really looking for bargains. This is why Tesla did the move of reducing prices. Some say this was because it's Tesla's vision. I would say there is also because of the pressure for Tesla to perform on getting those vehicle sales up. So I would say it was not entirely voluntary that they have done it. To be honest, as you know, I've spent 2 months in China, and yeah, I've seen how crazy this competition is, especially in the lower tier segments. So this is where, unfortunately, the Tesla product is not on the edge currently when it comes to even software. For example, the Chinese players have a better version of the assisted pilot, autonomous driving, assisted systems, these types of things. Very, very competitive. For example, Huawei is doing a great job at it. I was driving with the Xiaopeng pilot, the latest version, the City pilot. It could do U-turns and stuff. I was driving the NOP Plus beta version, so that's by NIO, also very powerful. And all of these things is where they might be not a main sales driver right now, but you can clearly see that the Chinese, they are catching up, and they're catching up quickly. So it's not an easy market. However, on the bright side, let me say so much positive about Tesla that I'm really looking forward to what Tesla can do in the area of AI. I know it's a hype topic, but to be honest, I think they certainly deserve some credit there with all of what they're building. All right, back to this report. I talked about R&D and SG&A, how this is still at high levels, but not, if you compare it, once again, if you compare it to what Tesla has done before, then it's not out of this world. They're investing more. They're also bringing out many more models. And to be fair, NIO has a better cash position now than Tesla had back then. So Tesla back then had only $3 billion in cash, and still spending almost the same in R&D back then. Of course, Tesla almost went into a bankruptcy, near-term bankruptcy type of situation, and Tesla back then was an entirely different market. You could say the market was less developed, but on the other hand, you can also say that today's market is far more competitive. So I don't know which one is easier or better. I just want to point out that people who are usually saying like, oh, NIO is burning so much money. Well, Tesla also burned a lot of money during that stage in time, very comparable to NIO. I've been there, invested in Tesla back then already. And I've heard all of the horror stories about Tesla and that they're not going to make it. And to be fair, it was very close. And to be fair, I also think that Elon Musk is an entirely different beast. And Tesla is also a more advanced company than NIO when it comes on the production side and those type of things on the technology. It's more advanced than NIO, I would say. But still, that's how it is investing in Chinese or in startups in general. What is important to say that Tesla back then had much higher average sales prices, basically because of the S and the X. So NIO is already actually quite lower here, which is interesting to see. And maybe Tesla was better back then or at those average sales prices because they also had more of a global footprint that NIO is currently not having. And, NIO now doesn't have this diversification when it also comes to the markets. That's why it's important that they're doing the European market entry. But of course, we cannot expect too much of that, unfortunately, right now as a small brand. What I think, for example, Tesla is doing extremely much better than NIO here is the way that they are launching new products and building up the demand for products. I mean, Elon Musk is so good at hyping stuff up, like let's say the Cybertruck, and then they let people wait for a very, very, very long time, and then suddenly it all comes to the market, and it's everyone wants this product. For NIO, it's a different situation, but maybe we don't talk about this for now. In this is a separate topic. What else? Maybe again, what is clear that the stock is priced for a under how I say it underachievement. Clearly, Q2, those type of expectations here, they will not be met. We'll now hear in the earnings call whether or not Q3 and Q4 might be in the books. This is actually another interesting learning here from the Tesla analogy, which is here in the year 2 for Tesla, which was 2018, which would be NIO's 2023. Tesla started the year by only 29,000 deliveries. And as we know, NIO in Q1 had 31,000 deliveries. Then Tesla next quarter had 40,000 deliveries. As we know, we expected 43,000 deliveries, or the analysts have done so, not the market, the analysts. And now, of course, we're going to be far below that. So it's going to be 23,000. So cut out 20,000. However, what Tesla has really done here in Q3 is they delivered suddenly 83,000 and 90,000. And analysts are not expecting the same for NIO in the last 2 quarters. Do I think NIO can pull off something like Tesla here and delivering 240,000, 242,000 in this 2018, or NIO here 2023? Look, it's quite unlikely. What Tesla has achieved here is phenomenal. You also saw that the average sales prices went down to 80,000. So this was when the Model 3, the Model 3 ramped from only 9,000 in Q1 of that year to 63,000 in Q4. And that's why I think that, this must be the global footprint and this whole huge list of people who had paid a deposit for this car, and there was huge global demand for it. And so when they could ramp production at that point in time, they could leverage these huge sales, which basically propelled them to the 240K. Something that, of course, we would like to see for the full year of 2023 for NIO. However, now the trend is down. For now, the trend is down. We cannot say it any other way. And so also the trend for the ET5, and by the way, these are just guesstimates because we don't have the exact numbers of the ET5, but I guess in Q1 they sold around 9,000 and around 7,000 in Q2. Will the ET5 scale to these numbers? It's very unlikely, but will those numbers be much higher in Q3 and Q4? I think that's very likely. And will the ES6 also have very high numbers in the in Q3 and Q4? Yes, I do think so. So, there is potential for NIO in Q3 and Q4. It's not all really black. And if you go a little bit to this, those I've done a video about that before, about the different scenarios, how NIO is priced, and what could be a share price for 2023 full year deliveries. Currently is sitting at a share price of around $8 or even below that. So that's expecting rather 6.6 billion in annual revenues than the 11 billion. Once again, like the analysts, they're guiding to 11 billion this year in full year revenues. But today it's rather priced at a price to sales multiple, rather for 6.6 billion and a 13 billion market cap, and so this share price. And that would roughly translate into 120,000 vehicles delivered. So that's far below the analyst expectations, and far below to what NIO has guided before. But that's what the market is pricing right now. So the traders and the hedge funds, they see NIO delivering 120,000 or less cars this year. Maybe even here, maybe something like this. The market stays neutral, meaning like we don't get a decrease in the price to sales multiple. And they sell even less cars than 120,000, maybe just 108,000. That would translate maybe into 6.8 US dollars of share price. And, that's what maybe some of those players out there are betting on. That would mean zero growth for the company. And you need, for each of these scenarios, you need to put kind of a probability to it. How likely is it that NIO is not going to grow year over year? Maybe you can have a look a little bit of what's coming up here. So one way, this is the scaling of the battery swap stations, which has been quite conservative in the first half of the year. So they only increased from, 1,275 maybe to 1,450. So maybe around 200 swap stations. That's not a lot, right? If they want to actually build 1,000. And remember, again, a swap station, this is marketing. This will drive sales. When they build more swap stations, the sales will also go up. And we'll see whether or not they now think they will actually kick it off and start scaling that. This could possibly happen. So that would be a way of driving volume. What else? We have, of course, different new models coming up. So the ES6, this one is not showing up in the numbers yet. Maybe the July numbers will be the first numbers where it does matter. The ES8 is possibly announced very soon, and possibly starting deliveries also very soon. So that's a candidate to drive sales in the second half of the quarter, in the second half of the year, sorry. Then we have the ET5 in a new version, the touring version. This is quite interesting. Everyone is in Europe is excited about it because we love to drive that kind of hunting versions, touring models in Europe. But it will first come to the market in China, I think. And what's interesting here is that this is kind of an analogy to maybe Li Auto, where NIO has something which the others don't have. So they're getting into a segment where there, as far as I'm aware of, there are not many BEVs, also battery electric vehicles, that are a mix between an SUV and a sedan in a way. So it's having more space. It's more a fit for families as well. So this is not only targeted, the ET5 is really popular with girls, young people. This is very interesting. How will this do even in China? In China, this is not super popular, I would say, as a model type. But the good thing is here, there's less competition. So why I'm saying this is an analogy to Li Auto, because Li Auto is, the only one in the multi-purpose vehicle segment, so MPV segment in China, which is hot as hell currently. Additionally, of course, they're also a hybrid, and that's interesting. Maybe this might find some buyers that before would have not switched to EV or not considered NIO as a brand. Then the EC7, we won't have a large volume for that one. This is more like a very fancy car, I would say. And the EC6 might also be upcoming, so a more affordable version of the EC7. So long story short, lots of new models on the NT 2.0 platform, and the growth drivers would certainly be the ES6, maybe the ES8, because I have something to show here, and also a question mark about the ET5 Touring. That might be worth exploring. What I have, oh, by the way, so I'm looking here in the Patreon network. Feel free, you can support this channel by going to patreon.com/Dongxi. So this is a way of supporting us here on the channel so that we can stay independent. We're not spamming you with advertisement and stuff like that. And if you are the $10 tier member, you can actually get invited here into this community. We also have an all member chat, and I'm most of all, posting daily. I just posted, by the way, for the Germans who are watching, a new video, which is all in German, an interview with Frank Thelen. So he's a German investor. He's also a fund manager by similar to ARK Invest type style of investing. And I've got an interview with him. By the way, he's also part of this Patreon community. I don't know if he's watching. If you're watching, or your analyst team, then hello. We have a cool community of people exchanging views about mostly NIO, to be honest, but also other Chinese shares. Anyways, what I posted in here yesterday was looking for keyword trends on WeChat. So as an indicator of how popular are different keywords or search terms, right, on WeChat. And this is only going back to, I think, summer of 2022. And they have different data points, of course. And the highest here is for the ES8. That is quite a surprise, right? So this means there's lots of search traction for the ES8, and that surprised me. I thought there would be more for the ES6 than for the ES8. And what's also interesting is that in comparison, the ET5 and the ET7, so the sedan segment, is not even as interesting to those searches. Of course, this data might be a little bit different if there would be the launch of the ET5 and the ET7 within the range of these data points, because of course there might be a spike, let's say with the introduction of the ET5, and that might correct these overall numbers upwards here. Whereas for the ES6 and the ES8, we had more recent events, right, where people were actively searching for it. But overall, I think the good insight here is that the ES8 might actually be a bigger growth driver than we would assume. And also the SUV segment in general is much more popular than the sedan segment. So that's something to look forward to regarding what might be coming up. Then we have to talk about, of course, the net income, which it was a beat on whatever EPS here in this report with those 36 cents. Well, I think it's of course not nice losing all of this money, 690 million in a quarter. The analysts have priced it or expected a little more negative numbers here on this regard. But overall, what you can see here, this is the dash line up here. These are the expectations of the analysts for Q3 and Q4. So going further towards the guidance of a potential profitability, NIO said like in Q4 they might achieve profitability in terms of the, how did they mention it? I think taking out the R&D, something like that. So not a real profitability on the net income that is being reported. So don't take it for that. They're guiding for that for next year. But some sort of and more internal metric of that they're currently just still investing so much in all of the R&D efforts and scaling up stuff like that. So who knows? The most important part here is, of course, at some point this might change direction. Are we at the point now that Q1 will be the change of direction for the net income and the EPS? I don't know. Like Q2, I think might be even more negative here. I don't know. Like the analysts are targeting it higher, but of course the sales are very low. So, and maybe with that we even have more depressed margins. So Q2 is not looking too great here, right? And I think, again, this is what the traders and the hedge funds are pricing here at the current stage with this $8 share price for no growth and a still negative income and still no turnaround in EPS, because otherwise they would also need to cover their positions, like in case they are short or in case that they see a turnaround, that there's more growth coming. I think no one would sell NIO at this point here at $8. So those people who are selling here, they are still expecting more downside on those metrics and fundamentals that I've just talked through. So here's some indicators that you might want to think through. As I said, like this is a very simple model. Of course, there's going much more into it when judging a share price of a company. But what we're looking at here is a price to sales multiple. What is influencing the price to sales multiple? Well, how well the Chinese economy is doing, and with that, what's the performance of Chinese equities. So quite recently, we had lots of talk about how the Chinese opening up has failed in terms of spurring up the economy. So I think overall, if you look at Alibaba, if you look, the big tech names in China, all of them are back to low points. So if there is no traction on Chinese equities, it's hard to overperform for NIO as well, especially since NIO is discretionary and premium to luxury segment. So this is what's coming and recovering at the last point, right? First, we need to have the stuff that's happening right now with people are starting to go out and spending, getting some confidence. Speaking of confidence, trust in management, I think, has been eroded with was it December last year when they guided to much higher, all of this mess during the lockdowns and how they still guided for higher deliveries and then disappointed on that. All in all, I think 2022 wasn't too bad, and with 120,000 deliveries for what kind of a difficult circumstances we've been in. But the management guidance and the reality, that was really an erosion of trust in the management. But as you know, if you're watching this channel, I was not actually talking too much about this because it's really easy to blame management about stuff like that they are too outgoing in their in what they say will be the future. And I think one of the best examples about that is Elon Musk. He's always setting very bold goals when it comes to self-driving cars, when it comes to launching new products like the Cybertruck. It's still not in the hands of consumers, all of these things. And well, I mean, there's also lots of talk about this for Tesla, and you have a point when you say that Elon Musk is sometimes over-promising and under-delivering, or he is, maybe even a shill, or maybe even straight out too aggressive in his marketing. You can all say that, and you're right with that. But in the end, he also has still delivered, maybe sometimes much later and so on. And I'm not saying that Li Bin or NIO is in the same category. I think they possibly have to learn their lesson on how they are guiding investors. We might see about this in the investor call today. So maybe they take back some of their more aggressive guidances today. Although I'm not sure if this is the point of doing that, actually, because they still have the Q2, the second half of the year, which might actually turn out better than most think, given what's going on currently. But just to give you A little bit of a context here and perspective again. It's very easy to bash management for startups for non-achievements or over-promises. In a way, sometimes, unfortunately, the truth is you have to over-promise in such kind of a market, because it can become also a self-fulfilling prophecy. And of course, if it doesn't happen, then you look like a fool. And NIO management right now certainly looks like a fool. And I'm looking forward to how they want to correct that. Let's see. Certainly has brought out lots of YouTubers who are riding this trend with negative headlines and talking all of this gossip. I could also catch quite a few more clicks if I would do that as well, but I think it's not very helpful. And in the end, you can also get proven wrong by some of these CEOs and business leaders in the end, and then you can also guide on the wrong path here. So what else could happen? The Fed could stop hiking rates. So the risk-free rate currently, why you want to invest in NIO? No, you don't want to invest in NIO. You want to put 100,000 euros just on a bank account and get 5% without the risk that this money is going to get cut in half, right? So there's not lots of demand by capital chasing opportunities like NIO. It's one of the reasons why not only NIO, not only Chinese stocks, but general risk stocks, unprofitable stocks, crypto, and so on, is not doing great. The US dollar strength with all of the issues of the geopolitical stuff like US-China relations, but also Russia and so on, it's basically a flight to safety. And so, again, this is putting emerging markets under pressure. And so this is leading to very, very, very contracted price to sales multiples. So these are, I've shown it before, but for NIO, it's currently now at a level that we haven't seen before, even during the time of bankruptcy or immediate bankruptcy, I should say, for NIO. So these times are special. They are not normal. They haven't been normal during 2020 in all of the, how fast stocks have risen due to the free money. Now we have the reverse effect. We have the unprinting. Money is very scarce. Money has other opportunities. And well, maybe this will even out over time again. But the question is, when will this happen? And if that's going to happen, then of course the upside in stocks like NIO or other of those risk stocks, maybe even ARK Invest has a revival. Who knows, right? Then sales and revenue. So that's more on the fundamental side. We need to see the Chinese economy to pick up, to also get this long tail premium segment demand again. Battery swap policies. Today we had a rumor that there might be policies targeted to a uniform standard of battery swapping in China. EV policies, I think yesterday we had the rumor. So from policy side, they're now seeing that they need to also maybe help this sector a little bit more again. And to be frank, this had, I think, a lot of impact on EVs in general. So Tesla was struggling with the demand in the beginning of the year, had to cut prices. Li Auto doing very, very well because people, they don't want to necessarily buy an EV if they also can get a green license plate, and if the incentives for EVs are not there anymore, which they have got cut this year. Affordability of models, we've now seen that the average sales prices have come down significantly. And yeah, the competitiveness is a question mark for NIO. How good can they compete within this very, very, very competitive market in China? I have to say, just basically, like after my 2 months in China, where I have been to the Auto Shanghai and tested lots of different models, I do see that NIO is positioned uniquely. So they are not one of those Me Too brands, which there are plenty. Some of the old traditional brands have launched their own EV brands and basically copying everything from Tesla, from some of the car manufacturers, or brands, I should say, like NIO and so on. Yeah, but on the other hand, NIO is also not doing everything well. And on the car, there have been issues with the ET7. On the quality check wasn't great during the lockdowns. There are, it's still tough to sell in this premium segment as a Chinese brand. It's not an easy thing to do. And while the quality, I think, is great and is also a differentiation, for example, against Tesla, first of all, you still have to convince buyers and find and expand in this segment. It's not an easy task. So yeah, we'll see. I think these are some of the slides that I wanted to show. Of course, maybe let's talk about the last bit here, which was here on where was it? This part, income, business case. The cash balance is not looking great, right? Going down to 5.5 billion. As I mentioned before, Tesla was more around 3 billion back then at the same stage of the company, so had less cash available than NIO. I think, it depends a lot to whether or not NIO, of course, can now turn the page and decrease the net income losses here, as the analysts are projecting. If that's the case, then very quickly these type of quarterly losses might be getting smaller and smaller, and then it's a nice cash cushion, of course. The question is always like, when do you want to invest these funds? So NIO has plenty of funds available. Of course, you don't want to go bankrupt, and it's a question whether or not NIO can actually do this turnaround. So you never know. This is, of course, that's why NIO is a risky investment. It's investing in a startup. You're not investing in an established company. And so, yes, they might go bankrupt if they not manage to go back to those double-digit margins, and if they don't manage to scale their deliveries. That's certain. They might be able to tap into additional financing in China, where the interest rates are getting lower and lower. They have not an inflation problem. The Chinese government needs to get the economy back on working. But I clearly do see a path for NIO to turn profitable, maybe next year, maybe not the whole year of profitability. Maybe that's 2025. But if the sales are growing and the margins are getting back up with a bit more volume, then there is a clear path to profitability for NIO there. In contrast to, for example, brands like XPeng, where I think they had pretty much always low margins and low average sales prices. But of course, now you can also critically say, yeah, well, now NIO is starting to do the ES6 and the ET5, which is bringing down average sales prices, and the margins have come down because of that. Plus, then they're going into sub-brands, which also may have tiny margins overall. So, how realistic is it that NIO will achieve those double-digit margins? That's the question that's the billion-dollar question for NIO investors here. Let's see. Maybe they talk more about this during the earnings call, and I think that will be in 30 minutes, more or less. So, right, let's maybe take some of the questions. Unfortunately, I haven't looked through that during the entire time. So what is this? Was there any period when Tesla sales declined? Let me look into my chart. I don't know it by hand, by heart. So, I mean, what you always have is this seasonality pattern. So, for example, here, that was 2018, and then 2019, sales dropped from 90,000 in Q2 to 63,000 in Q1. But it was an overall year-over-year increase from Q1 to Q1 between year 2 and year 3. So it's actually normal that you see that the Q1 is less than Q4. But of course, usually during that time, you would get all of the negative headlines for Tesla that, oh my God, sales dropped 20% or 30%. So, yeah, but overall, it's looking more like Tesla it has also been stagnating a little bit in 2017. So that wasn't a great year. but at least they showed year-over-year growth during each of the quarters, even if it's just slightly. I'd have to look back into earlier quarters if there wasn't growth at that point in time. I don't know, but overall, this looking more healthy than this current year-over-year decline by NIO here in the what is it for Q2? It will be a year-over-year decline, a slight decline for 23,000 if they are only reaching this lower guidance. So if you not care about apps, what will be the impact? To be honest, it's very difficult to say for me right now because I haven't seen any leaks or plans for it. As I said, I was never too keen around those sub brands. So I'll give you my comment once I see something. I don't want to speculate about these brands. Of course, naturally, if they are lower priced, then naturally they will increase the volume. So the number of cars sold will be higher. Maybe that's nice for the retail investors because then they get higher sales numbers every month. But it's difficult to have good profitability at such sub brands. And what I also don't like too much, it's putting NIO more in direct comparison with Tesla, getting into this much more difficult segment of the mass market. So I'm always like saying Tesla is kind of the new Volkswagen and NIO is like kind of the new Audi, BMW, Mercedes. So it's very simplistic speaking like this, but that's how I see it. What's this? Alan says NIO needs to do everything possible to reach profitability as SAP. Yes, of course, they need no new models. Well, they have, I think for now, they have lots of new models that, maybe that's now behind us. Maybe with the R&D spend, maybe that was the peak in R&D for a while, those 550 million. Who knows? Maybe that's including a big chunk of the sub-brands and the new models that we are now seeing already. And maybe then they can go back lower to those 300 to 400 million. But on the other hand, if they manage to scale volume and the margins recover and they get more cash flow coming, why not spend more on R&D, right? Because, possibly NIO management, they have just a different perspective than we have. They possibly have a different feeling of the market. They have possibly a different vision with all they want to do. And they say that now is the time for invest in order to use this window of opportunity to position themselves in the market before others are catching up. And what you're doing now defines what will happen in 2 years down the line. And so this is, for example, why I think NIO is investing, for example, in NIO Phone. I think it's not because they want to conquer the phone market. I think it's because they see that the phone players like Huawei and Xiaomi are entering the business and potentially Apple at some point, and they need to position against that, not by simply selling phones. There's no expectation that NIO will be selling phones like an Apple, but the car will be much more defined in the future for this seamless connection between the car and the phone and this user experience. And if you're not having the phone as where you have no control over, for example, Apple is not opening up certain functionalities, let's say, that have an impact on how the door opening mechanism works and stuff like that. So And you see with Huawei, for example, how the mobile phone OS suddenly becomes ported onto your car. And so if the next fighting ground is software in a car, then NIO would not be able to compete if in China suddenly the whole experience is around smartphone plus the car. And so I actually like that as a strategic outlook that they're looking into that. Will the outcome be good? I don't know. But certainly I saw it on the ground, like Huawei, this is incredible. Like the Harmony OS, which is their operating system, which I've built, it's crazy good. And I think it could drive maybe 30% to 40% of the whole cars in China at some point in time. Because it's simply so good. And I think the OEMs, they don't have the capacity to be able to be as good as Huawei in this area. Plus, bundle it also with their autonomous driving. So this is a real threat, not only to NIO, but also to the whole car industry, even to Tesla, in my point of view. And so this is something which is maybe going to happen in 2 to 3 years, that we will see this battleground emerge more. So I feel I'm already boring you guys with all my commentary here. I also need to get ready for the earnings call, I guess, which I will make, by the way, a separate live stream. They are burning more cash in Europe than what they are selling. Yes, of course, Wayne. That's the very nature of a startup. You need to burn cash first in order to ramp up sales. Unfortunately, there is no other way. If you show me a way to be instantly profitable, especially in an industry like automotive, then you're a mastermind. I think I showed it before here. How much money was Tesla burning? 300 million, 300 million, 600 million, 700 million, 700 million, 700 million per quarter. Even in 2019, that was when the Model 3 was already selling in the 10,000s. They were burning 700 million a quarter still. So, and Elon Musk here also said, like, it's very, very difficult to break even. So he knows best. He almost went bankrupt. Don't expect this to be an easy walk in the park for NIO either. So what else? Marcel, to reduce the cost, NIO should produce Alps in your park, saturating factory 2 and not spend more money in factory 3. Yeah, they are building a new factory, but that's the lean business model of NIO, that they are not building the factories themselves and not owning them themselves. So they have not to invest a lot of capex onto that. Instead, they can invest more into charging infrastructure like the battery swap stations or in R&D. So their business, their core activities revolve more around the design and R&D of vehicles, not so much about manufacturing. So I don't think there is a big impact on F3 when they're building a new factory there. They might have their reasons why they're doing that, possibly some incentives by local government there for setting up new industry parks, and then there will be, of course, new employment and such. That's natural that local governments will incentivize things like that, and maybe NIO is taking advantage of that. So I don't see that as a big point, but of course we want to have more clarity on what's going on with F1, F2, F3. It's having all of this big capacities potential, but of course definitely not being used currently. Okie dokie. Yeah, I think I'll wrap it up here. I need to prepare for the management call, which I will live stream and also give you my additional thoughts around it, as always. And then I will also have a separate Q&A. As I mentioned, like here in this earnings report today, the negatives were the vehicle margin not recovering. I'm not buying the management explanations there in terms of that this is mainly due to the lower configurations, to be honest. I think there's more to it. And one is wondering what's happening with the lithium prices. Well, a beat on the bottom line here, but still bad, still in the situation that also Q2 is going to be terrible. But I think the guidance wasn't actually that bad, considering how few vehicles have been selling in the first 2 months. So could have been even worse. And high probability that this will actually happen, to be honest, as always. And then, not sufficient information here for all of those lovely traders of NIO stock and the hedge funds who will be front running the analysts here. We need more clearance on the Q3 and Q4. That's where the analysts stand at. Market is saying, no, this is not going to happen. It's going to be much less than that. We are pricing NIO for 0 growth, or maybe it will even go down. So that's what the market is telling us right now. We'll see after the earnings call what they say. Thanks, guys, for tuning in. I'll see you in the management call and in a separate video.